Hey folks, welcome to the daily review for July 10th. Today we're going to cover the analysis of the major pairs like always. And one thing that you'll notice is that today it looked like the markets kind of reverted back into the direction that we had kind of previously forecasted. Remember that yesterday the market kind of floated in the opposite direction for a little bit without a lot of authority. But it looks like today the market kind of corrected itself and is heading back down with some of the technical continuation that we expected from last week. So that is good news for us, especially if you're trading those longer term signals and trading based on some of the things that we talked about last week. As far as news tomorrow, there's definitely a good amount of news. Most of it is actually in the afternoon and evening, but there is some 8:30 a.m. Remember, that's in the middle of the New York session. That's Eastern Standard Time. You have Canadian and U.S. dollar trade balance. So both of those red tech events going off at one time, at the same time, and so that could create some serious volatility, especially if you're looking at the USD CAD pair, because there's two obviously red tech events in the same pair. So keep an eye on that. Later on at 2 p.m., we have FOMC for U.S. dollars, so definitely could be a massive news announcement. Make sure that you keep an eye on that. And then at the end of the day, towards the evening, we have 9:30 p.m. Australian news. That's employment change and unemployment rate. And remember that the odd news lately has rocked the market pretty good, so you want to take note of that and make sure that you're keeping your eye closely on your odd charts when that announcement comes out. All right, and then lastly, we do have some Japanese news, which is it's tentative news, which obviously means that there's not a specific time that's coming out. But sometime tomorrow there's going to be a monetary statement and also an overnight call rate. So definitely keep your eye out for that Japanese announcement. Whew, okay, let's look at our terms of agreement. This is important because we have to let you guys know that we are not registered or licensed to provide investment advice. This is just our opinions. It's purely for educational purposes. And we don't take responsibility for your money. That's basically what this says. The government is very strict about this, so make sure you understand these terms. And then we can jump into our analysis. Like I said, it does seem like the market is kind of showing some continuation of what we looked at recently. Remember that the euro pound is one that I mentioned was a great short in my mind because it broke through this descending triangle and also broke through the previous low that we see here. So for me, that was a great signal because this low was taken out and this break was continued with this one large bar. Now again, yesterday we kind of had a stall bar that floated, but today is a pretty nice continuation bar, something that shows a little bit more momentum to the downside. Now we are at about 5 bearish bars in a row, so at this point in time, if you're short like I am, you begin to get slightly concerned about the overextended situation. You don't want to be in when it bounces up, obviously. But at the same time, there's a lot of room for euro pound to head downward. So, for me, I'm short on this. My kind of idea for trading is to lock that profit in, at least at break even or plus a few pips, and try to let this one ride because I think that it does have a lot of profit potential. Now, I'm not saying that you shouldn't be concerned about a trade being overextended because the market does bounce. It always bounces. That's what makes it a market, so you have to be aware of that. But I don't think that this is just totally overextended and can't go down any longer. I think there's still a good amount of bearish momentum left in this if it wants to head down. So that's what I'm expecting, at least, and that's what I'm hoping for. And we'll see, obviously, tomorrow if that does happen. Okay, euro dollar. Obviously, euro has continued to be bearish. Now, just like I said yesterday, we had a small blue bar as the market kind of floated back, and then today we broke back down below this previous low here, and are somewhat of a decent bearish bar. It's not obviously a powerful bar or a momentum bar. But it's at least a bearish bar that covered the previous bullish bar. So the sentiment there has continued, at least in the bearish direction. You might want to see a little better follow through than this smaller bar, but I think that euro dollar has a lot of bearish momentum still there. As far as what I'm expecting, I don't think that price is really going to rally off the support zone. It's struggling a little bit, as you can see. We're here struggling with a few bars and a few tails, but I don't think there's going to be a strong rally up to the 1-2 or 1-3 or 1-2-5 or 1-3 area. But I do think that that there's a possibility that this could round out. You see, when we have this kind of this choppiness, there is the potential for it to round up and start going that way. I don't think there's going to be a power bar or a power move based on kind of the small bars and the small stalling that we see now. But you always do have to be careful. Sometimes the market moves a little more subtly than we expect, and it just kind of looks like it's moving down, and all of a sudden it's rounding back up and going against us. So what you want to see here, so that you're sure you're not caught in that, is a power bear bar. That's to set the record straight that this is not just kind of dying down and getting ready for its next rally. You want to see something powerful that tells you that this is bearish all the way, and so that's what I'm waiting for in the euro dollar. Okay, odd dollar. Now, odd dollar is this pair that we keep saying it's gonna either rally or it's gonna fall back down to these 97 lows, and so for the past week and a half it just hasn't. It's not moving. It's staying in this little area, which we want it to break out. We want to see what this thing's gonna do, but it has all these kind of half bars, these indecision bars, and it's not really making a rally. So my advice is going to be the same as it always is. Until it does make a rally, until it does make a move, I'm just going to stay out of that. I would advise that you don't look for a trade inside that confusion, inside that indecision. You wait to see if in fact the odd is going to rally up to its bullish area, all the way up to 107, 107.5, or even higher, or you wait until it collapses through a few fib levels and you think it's going back to its previous low. In the middle here, I don't want to touch it. So that's where I'm at on odd dollar, and I'm just gonna wait on that one. Okay, let's see. There's not actually too much more that I want to show you. We'll look at pound dollar because last time we looked at it, it was trying to make a little bounce off this area. But there's not too many pairs that I'm looking at right now because a lot of them are just kind of in these indecision areas. The euro pound, the euro dollar are the two main ones that I'm paying attention to because I think they actually have the ability to to get out of a resistance zone and really start moving in a certain direction. And then of course the euro odd and the euro CAD, which I keep mentioning, are capable of free falling to historic lows. Obviously the euro odd has already gone that far. But with the pound dollar, we see that it's still just hanging in this area, and it's unfortunate because you want to get in the market, you want to make good trades, but you just can't when the market is just sitting in these areas. It doesn't make any sense. That you might as well flip a coin when you're making trades in these areas. So it's just wise to stay out of these areas, in my opinion, and just wait for more definite directions. Speaking of euro odd, let's look at euro odd. I mentioned that this thing is just obviously free falling to the downside, and we can see that it's touching basically lower lows each day, making new record lows each day. Even today, as it kind of retraced up, let me move this line out of the way. As it retraced up, it still at one point in the day touched the lowest it's ever been. So that's serious stuff going on, and I think that the euro odd has potential to actually go much lower. Now, obviously it's building a small base here, and as a short trader for euro odd, what you want to look for is that break to make a new low, and I think that that's a very good possibility. So as soon as it kind of breaks out of this little zone, you might wait for that retest that we always talk about, and then the continuation, or however you're going to place your actual entry. But my point is that you're just looking for the lower step. We had a lower step and a lower step, and now we're at this step here. So we're just waiting for the next step, whatever that's going to be, and it'll probably present a pretty good short opportunity, assuming that this rally to the downward side is for real and it's going to continue. And obviously I don't want to state things with certainty or anything like that. But it does seem like this makes all the sense in the world for euro odd to continue to fall because euro has the least reason to be strong, and odd seems to have not that odd is great, but it has more of a reason to rally than most of the other currencies. So euro odd seems like a pair that could really work out well in the downward direction. Pound New Zealand actually rallied today as we had some very weak New Zealand news. Now remember that I've been short on this, for the majority of the fall down. I had my stop loss locked in for a few hundred pips up here and was stopped out Friday, but it's continued certainly upwards. So this is actually turning into a pretty nice long setup as we see a very sharp reversal here and 3 good bars in a row. Now of course it's hard for me to ever be interested in a long on the pound New Zealand because all of the momentum is obviously down, not only on this recent rally but period in history. The momentum is always down. So that's something that makes me very weary of taking a long, but at the same time, if the technical signs line up and there's a great opportunity, you don't want to back out of that. So with that said, there's certainly some continuation. Obviously, there's going to be some resistance here and here in the way. But if pound New Zealand were to break this level and continue to show momentum to the upside, there's probably a pretty good long opportunity in there. I think that pound does have the capability to be a little bit stronger, at least than euro. So pound could rally. That's not out of the question. And you don't want to miss out on a trade opportunity. Just because you're overwhelmingly bearish overall, you could miss out on a few hundred pips just based on your bias, even when, because you're not paying attention to the technical signs. And at least for me, I want to be a technical trader over anything, and try to get over my bias and just take the actual solid technical signs. So I think that this could develop into a good trade, depending on how things continue from here. So keep an eye on that. Definitely keep an eye on this level as it's trying to rally up. Let's take a look at USD yen. I mean, we haven't looked at the yen a lot with a lot of detail because it's just been hanging in this area where it's just one of these other areas where I've been talking about not really wanting to trade. And the reason obviously is because whether you went short or long any time here, there's not really a lot of pips to be made. I mean, maybe if you took a long at the very bottom here, you could actually get a decent trade out of it. But for the most part, there's not a lot of good movement here. So USD yen is just something I've kind of been ignoring. USD and Japanese yen have remained basically at the same strength for the past few months anyway. I mean, they haven't really. It seems that when yen is weakening, dollar kind of weakens with it, and vice versa. So not really getting a lot of good opportunities here. If you get a good bullish bar from the bottom of the base, it could be a good opportunity, and same with a bearish bar at the top. But for me, that's just not good enough. I want to wait for something that has more direction, that has more room to move, and hopefully I'll be able to find that on another pair instead of just taking a lousy trade because it's the only one I see. So that's not really what I'm interested in. I'm interested in taking good, high-quality setups, and hopefully, when the USD yen does break out of here, we'll get one of those good, high-quality setups and be able to take that. I think that's about it. I don't think that there's anything else that I really wanted to cover. We can take a look at USD CAD because we've been talking about how it was headed down towards parity and how it's kind of trying to make a reversal here. And you can definitely see the momentum was down here, certainly in a downward channel, and now it's rallying up. So perhaps we'll see a bounce off the top of this little downward channel and then a continuation back to the downside, which would be a great short opportunity in my opinion. If we got a short opportunity at the top of this channel, I think that'd definitely be a great short opportunity. So this could be setting us up with a really nice trade, and we'll keep an eye on that as well. Alright, now I think that is all that I wanted to say. If you have any questions or comments, as always, please feel free to leave a comment, and I'll try to give the best feedback I can. Talk to you soon. Have a great day. Trade wisely, and watch out for that news.